Mayuresh Joshi, Vice President, Institutional Broking with Angel Stockbroking, joins us. Mayuresh, good morning. Thank you for joining us. Mayuresh, yesterday we saw a monster recovery of 100 points plus for the Nifty. Do you think we have a bottom in place, and in the short term markets are unlikely to fall more?
Morning, Nikunj. I think if you look at the events over the past few weeks, I think most of the known facts into the markets, falling IIP data, which was a negative 2.2, I think the inflation numbers which came up, the recent RBI report, which is still suggesting that the depreciation of the rupee to the tune of 11% over the past few weeks will not be fully passed on. So I think it has to still get fully passed on into the prices. So in that sense, I think the known macro facts were known into the markets, into the institutional investors and the markets at large. So with that sense itself, I think the kind of fall that we've seen was quite harsh in our opinion. And our own estimates are that Nifty should not breach 5,100, 5,200 on the downside. But then again, I think the systemic risks that are there into the system because of lower growth that might possibly happen, because of lack of government expenditure taking place in the next few quarters, would have a toll in terms of the capital expenditure spending, both on the private side and the public side as well. So in that sense itself, I think the GDP estimates will get muted down. I think when we were talking about 6% at the beginning of the year, we are itself talking about anywhere between 5 and 5.5 at the juncture that we are in now. So in that sense itself, I think the upside to the market is limited as well. So in our opinion, I think the markets would trade possibly in the range of 5,100 on the downside and say a 5,700, 5,800 on the higher end of the band.
So for another 300 points from where we closed off yesterday, Mayuresh, do you think it is going to be metals which will continue to ride the momentum?
Morning, Aisha. Yes, I think clearly metals are riding the sentiment at this point of time. But then let's understand, I think they're basically moving up on a couple of factors. I think the Chinese PMI data which came through, which was quite strong, I think that was one of the fueling points for the metal rally. And obviously the kind of rupee depreciation that we've seen, I think that again posed the domestic steel companies in a better position as far as the landed costs of import go. So in that sense, I think the realization power or the pricing power for the local steel companies definitely improves. But if you look at the global steel demand and supply scenario, I think it is still a little bit muted. If you look at Europe, if you look at Russia, I think it is still muted in those regions. Even domestically, I think if you look at the May and the June data, I think the steel demand supply is still muted. I think the auto industry, the construction industry, it is not shaping up the way it should be. So in that sense, I think the muted domestic and global demand, plus the kind of destocking that is going on within the global markets. If you look at steel inventories, they're almost at 40 metric tons in March 2013. I think the destocking process is going on. And obviously they're being abetted by the fall in iron ore and coking coal prices. Having said that, I think yes, selectively within the space, I think one can still